Now that banks are failing all over the world, it's a time to buy Bitcoin, gold, silver, uranium, digital gold. Bitcoin has pumped big time this week on being better money. In fact, Bitcoin is doing a second breakout attempt right now through the neckline of this inverse head and shoulders formation, a pattern which then gives it a target way up here, close to 40,000. Today's candle hasn't closed yet, and on Tuesday this kind of candle was rejected, but now we have the second attempt. I'm very happy to see this. In our Discord I shared my entry at 17,433, front running the flip. Then Lars Online indeed flipped gold shortly after at little below 21,000, and right now, ladies and gentlemen, we are at 26,748. Very nice.
Wow, it's very nice.
And that's while stable coins like USDT and unstable coins like USDC are dropping in dominance. Here is stablecoin dominance as percentage of total crypto market cap, and we can see this clear trend shift that started in the beginning of 2023. And even if we exclude the stable coins, we can see that BTC is gaining in dominance over the altcoins. So it's a real gain for Bitcoin's proposition as being a store of value, digital gold, better money.
He cannot afford. Great success.
But what about the old gold? The actual gold? Well, if we look on daily candles, it looks the same. I can see on Twitter that many people are confused about what is happening right now. Either I am dumb or it is very simple. So if we zoom in at the little edge here at the end, we see that the Fed balance sheet expands again. We're now up to the same levels that we were in November last year, before much of the toughness even started. This is from the bank bailouts. Banks borrowed 159 billion from the Fed's discount window, 12 billion from the newly created bank term funding program, 142 billion to the new bridge banks created by the FDIC, or Silicon Valley Bank and Signature Bank, and some minor drop in their holdings of mortgage-backed securities. Then the purchasing power of the fiat becomes less versus scarce assets like Bitcoin, like gold. Or put differently, the price of scarce assets as measured in fiat goes up. So we should all go straight into gold now then, right? Well, there is also the timing aspect. Why didn't gold super pump in the last year when clearly the whole fiat economy just went straight down the toilet? If you rewind the tape to the previous time exactly this happened, in the 2008-2009 financial crisis, here's what happened to gold. If we look at S&P 500 during that period, it started dropping in October 2007, then hard in the spring and summer and autumn of 2008, hitting a bottom in March 2009, and from there it started going up again. Now the bars are S&P 500 and this orange line here is gold. And maybe it will come as a surprise to many that when this dumping really started hitting hard in the S&P 500 from early 2008 until late 2008, gold, the orange line, also dumped hard. How is that even possible? How can gold dump at that time? Because that was clearly a failure of the traditional banking system. It was what gave birth to Bitcoin. Gold was exactly the safe alternative at that time. Why did gold also dump? It's very simple. If you have a bunch of different assets and one of them goes down, maybe it goes down to zero, maybe you get liquidated, you have to sell some of the other assets to rebalance your portfolio or even cover for margin calls. So in a crisis, everything dumps. But then things changed. Gold started going up, and a lot. You can see that it shot out of the screen. If we bring it down in amplitudes, we can see what's happening. We can see that gold reclaimed everything that it had lost to equities in the previous cycle. It shot way ahead of equities. Here really was a bull run for gold, but then what happened after that? Gold got boring. In 2011, it was pretty clear that it was game on again for equities. People didn't want to hold safe gold anymore. Gold turned down. Equities continued up. Then in the later part of 2010s, we really got the everything rally. Gold picked up again. Equities picked up. Everything picked up. Crypto, NFTs, you could do anything investable and it would go up. Then what happened? Well, shit the fan a little bit. Equity is crashing down again, facing resistance, and here you can see exactly what I showed you before. In the initial phase of this crash that we've had in equities since beginning of 2022 has also been followed by gold price. See, it went down in exactly the same way just a little bit later. But as equities went down, people had to rebalance their portfolios, they had to answer margin calls, they sold gold too, gold also dropped, even though we've seen this collapse of the fiat system, which gold and digital gold Bitcoin is there to hedge against. It still goes down, Bitcoin went down, gold went down, everything goes down. But now gold has turned around. So will we see the same kind of behavior that we saw here following the 2008 crisis, that gold drops initially, but then there is a massive rally following in the years after where gold absolutely kills it in the market? Is that what we're seeing the first steps of here? I think it's possible. Last Sunday, we had the Silicon Valley Bank and the Bank Term Funding Program from the Fed. The BTFP lets banks use various securities at face value rather than selling them. And this is very important to understand as the underlying securities have dropped in value due to the increase in interest rates. So last Sunday, the disaster was averted until something else breaks. And that took 3 days. Then came Credit Suisse. I was in Switzerland just a few weeks ago, and 2 weeks ago on March 3rd I tweeted this: crypto is risky, as many people say. Meanwhile, Credit Suisse, the probably most trusted bank in the world, with 166 years of solid track record, is down minus 96.5% from the top. I wrote, everything is risky, folks. You need to take action. Own action if you want to protect your investment. Then it continued down and hit a low of minus 97.7%. Then someone wrote, most trusted bank in the world. I'm not saying I'm trusting Credit Suisse in March 2023 after it has dropped 96.5%. I'm saying many people did during these 166 years. The company was one of the least affected banks during the global financial crisis. And in 2021, Credit Suisse had assets under management of over 1.6 trillion Swiss francs. This much money means a lot of people trusted Credit Suisse. With the bailing out of the banks, the CPI seemingly coming down a little, a pop in the market is expected. And the market sentiment is still bearish. People are still sidelined, which is bullish because most people usually tend up being wrong. Gold, silver, Bitcoin have rallied and the trend is still up. Uranium companies were thrown out with the bathwater of the general stock market. Some are in breakdown mode, and if we are lucky, we will get opportunities of accumulation, of course with tight stop losses, because the trend is up here too. The Fed and the policymakers will of course watch the liquidity situation very closely and probably running into a brick wall in the near term to raise interest rates. The market has changed opinions many times the past few weeks. Here is the current tally. The market seems now pretty convinced that the Fed will raise one step in March next week, from current 450 to 475 to 475 to 500. Then in May, another step to 500 to 525, which again is completely different from just a couple of days ago. So this just shows that predicting the future is pretty difficult. Then in June, a reduction of one step, and then in July, another reduction to the same level we're at now. And then in September, another reduction to a lower level than we're at right now. November, no change. December, even more reduction. Basically, the whole thing is a mess. Look at how this has changed the past couple of weeks. There is no confidence in the Fed or anything. This could be very bullish for the anti-dollar positions, like gold, like silver, like energy commodities, like uranium, maybe even oil and gas, and of course, Bitcoin. But if Bitcoin is so good, just look at this pump. Why not put everything there? Well, that's what diversification is. If we knew for sure that Bitcoin and Ethereum will continue to win over everything, and this line just continues up to 1 million, of course we would put everything there. But what if Operation Choke Point, at least temporarily, succeeds to shut crypto off completely from the real world? And perhaps it will take many years to reopen that door. I hope that won't succeed, I don't think it will succeed, but that's what diversification is. To take a couple of good bets, which are not connected like this. Let's look at some more charts. DXY, or Dollar Currency Index, or Dollar Strength Index, which I think is a better name, has clearly stalled after almost hitting 106. This acceleration that happened here has clearly lost steam. What will happen from here? Anyone's guess is as good as mine, but who knows, maybe it falls back down into this channel to 96, 97. Who knows? Unless we bounce off this level where the breakout happened. Gold has rallied over $100 since the collapse of these banks started, and it's very exciting. It's moving closer to the resistance of this rectangle. I am very optimistic to this. Now we're pretty close to the breakout already. Perhaps the most reasonable play is to wait for a breakout, hope for a retracement, so that it becomes possible to put a stop loss somewhere back in the channel. As explained earlier, I think there's a good chance that we get a real rally here, just like happened last time. The trend, according to Lars9com, is solid gold on the weekly chart. Also, if we compare gold and stocks, gold divided by S&P 500, we see something perhaps even more exciting. This really becomes an ascending triangle. We're an inch from a breakout. This could be actionable as well, indicating another good risk-reward entry of gold versus SPX. If we then look at some commodity company like Sandstrom Gold that I've talked about previously, we see that it's still in this channel, which is a flag after this up move. It has bounced off, and even though it failed the previous time, I still think that the breakout from this channel is actionable, especially if Larsen line turns up at that point. If we switch to silver, silver has a support around $18. The resistance it needs to break out from at almost $30. The trend on the 2-week time frame, which has been most accurate in the past, is not up yet. Now it has already bounced a little, that we're not really at any well-defined support exactly now. Hard to see any specific action to take right here. Buying should ideally be here at the support, so you could place a stop loss below. Otherwise, if buying here, where would you put the stop loss? We have mentioned in the Discord that silver versus SPX is a little bit different. Here we had more of a well-defined support, even though that broke twice, held here last time, and this could really form a solid bottom for a reversal. If we look at silver versus gold, or perhaps gold versus silver, so this is gold divided by silver, we see that after the all-time high peak of 126, this ratio pulled back a lot, down to 62. Now we're at 88, and the trend is again up, which would favor gold gaining on silver. But if say something like this happened, this backs up here, then it starts looking like a top pattern instead, which would favor silver gaining on gold. So I think there's also hope for silver companies here. When it comes to silver companies, our friend Mark Coops has talked a lot about First Majestic Silver. He has been calling for a good upswing, which is exactly what happened. Of course, it looks small here, but if you have the chance to snipe an entry, clear those levels, get to 20% gain, clear your stop loss levels, of course that is ideal. Of course, what we want to see here then is trend turning back up, and this one going for a real rally. Now to uranium. For these commodity companies, I try to introduce the topic before I take the positions myself, not come afterwards and say that you could have done like that. I hope you appreciate that. The real entries from a TA perspective, especially in the uranium sector, was actually years ago. Unfortunately, I didn't monitor this segment then, but if the best time to plant a tree was yesterday, the second best time is today. And looking at the futures price, actually not much has happened here. Even though many of the commodity companies have dumped very hard this week, not much has happened to the futures price. It's still 49.75, around the same level as it's been for months now. If you look at the Uranium Miners ETF, URNM, versus the S&P 500, as you recall, the uranium miners have really outperformed the rest of the stock market for these 2-3 years here. Then we got the symmetrical triangle, and now it starts looking like a breakdown. The thing with diagonal patterns, however, is that they're not really that reliable. They're not as reliable as horizontal patterns, and they're much more likely to morph. I could easily just redraw this level looking at the candle closes, assuming this one closes here, and now we have another triangle that hasn't broken out. So that's the problem. However, if this becomes a horizontal boundary here, and this actually breaks out, that's a descending triangle that breaks out. But it is a ratio, no one's really trading trading this, using it for clues. And in that case, we are now actually close to a support level. If we then take a look at another ratio chart, which is the uranium miners versus the spot price of uranium, we see that this ratio is still in the same channel. If these companies start really breaking out against the underlying commodity, I'm interested. Let's look at a few specific companies. So Cameco, still in the same symmetrical triangle. It's going a little too far into the apex of the triangle for the breakout to be actionable, but we're not at any support here, we're not at the breakout. Hard to take any action exactly here, because where would you put the stop loss? The trend is solid up. If we then look at Denison mining, we see something very interesting. We're actually right at support now. So from here, one or two things will probably happen. Either this support breaks, then it's a hard down. Lot of energy probably built up here. So you can see a lot of trading volume has exchanged hands. This breaks out on the downside, the next volume starts down here at basically half the price. But if it doesn't break and this doesn't become a head and shoulders top, it becomes a fulcrum pattern instead, which can become a launch pad for a strong move up, a clear invalidation, ideal risk reward. If this continues to hold, I would like to see some little bit hints of that. Let's look at another one we talked about before, Uranium Royalty Corporation. What I didn't like with this one, as I said, was that the neckline here isn't straight. We get diagonal patterns. Harder to say what is going on. Is this a breakdown? Probably. Or are we just in the support region? Clearly there was some buying interest down here, but we moved down the big volume area, hovering below that. Long way down if this doesn't hold. But if we turn around, this kind of patterns can become a strong platform for a major rally, and it's around these regions that a rally should start if it will. So everyone who felt sidelined when I started talking about uranium, instead of just FOMOing in immediately when you discover something new, it's often better to wait a little bit, to wait for some actionable event, either moving back to support so you can put some invalidation, or wait for a breakout. It's a super exciting day in the markets. Of course, I'm very happy for our Bitcoin positions. I'm very happy to see that it's moving. Perhaps we're getting the dream scenario here with a Bitcoin-led rally first, where both Bitcoin price and Bitcoin dominance goes up in tandem, and then ideally Bitcoin stabilizes at a higher level, starts getting boring, and people move their money from boring Bitcoin into exciting altcoins which are much less liquid, and they start going up insane multiples. Those are the kind of events that we will try to monitor, try to be correctly positioned. If you want to get on the train, go to ctolarsson.com. You can read about the course and Larsen line for Bitcoin here, and of course this applies even more to altcoins. For commodity companies, you click here, you can read about it here, and you press here course and indicator to sign up. I don't know what the market will do tomorrow. My uncle doesn't run the market. I'm just trying to play out what actually happens. Thank you, tack. CTO Larsen out. Hej då. 'Cause the sun is there.